Trillions of dollars are lining up for crypto right now. This is the start of a massive shift in global finance, and you're catching it early. Ethereum just stepped into the spotlight as the main highway for serious money to flow through. Wall Street, major banks, and government players are building directly on this blockchain, setting us up for a surge that can reshape everything we know about markets. But don't take my word for it. Listen to how one of Wall Street's top analysts describes what's coming for Ethereum.
You're basically saying that this is the new Bitcoin. You're getting in at a very early stage.
Correct. That's right. Because let's say stablecoins, which is 250 billion today, gets to Treasury Secretary best it's reasonable 2 trillion. That's a 10 times increase in size. By the way, already stablecoins are the 12th largest holder of treasuries. They'll become the #1 holder by then. So by getting to 2 trillion, you're ensuring dollar dominance. This is very good for the US, but 2 trillion of stablecoins is a lot of network fees for Ethereum.
Let's break down what Tom Lee means and why this wave of money could change the entire landscape for Ethereum, for crypto, and for anyone paying attention. So let's get specific about how Wall Street is moving on to Ethereum backed by hard numbers. For starters, Grayscale just secured SEC approval to convert their digital large cap fund into a multi-crypto ETF. This opens a direct pipeline for institutional investors to access Ethereum and other top coins through a familiar ETF format. Each new ETF focused on Ethereum signals increasing institutional capital and legitimacy. SharpLink Gaming, which trades on NASDAQ and collaborates with Joseph Lubin, Ethereum's co-founder and CEO of Consensus, has closed a $425 million private placement to implement an Ethereum treasury strategy. More public companies are starting to bring Ethereum onto their books as a treasury asset. And on-chain data also confirms a record number of firms transferring Ethereum onto their treasuries this quarter. Banks are also gearing up to participate. They don't want to be left behind, with Tom Lee outlining a thesis that banks will soon stake Ethereum to back stablecoins, transforming Ethereum into a collateral for digital dollars and strengthening trust and liquidity in global markets. Analysts point to a 2021 style price structure emerging for Ethereum, referencing a period marked by strong institutional inflows and rapid price movement. Chartists, or those who chart, have spotted an equity-like formation in Ethereum's price, with trading patterns now mirroring established financial assets. Ethereum's network is busier than ever too. This week, for instance, Ethereum hit a new all-time high for weekly stablecoin senders, with record number of unique wallets moving digital dollars across the chain. The surge reflects Ethereum's growing role as a real financial infrastructure leader, supporting billions of dollars in value around the clock without a bank in the middle. That's just beautiful. And now Ethereum is starting to build a new layer of value for institutions and retail investors alike: yield. With ETH staking, holders are earning steady returns directly on their Ethereum, similar to dividends from blue chip stocks. Banks and asset managers are paying close attention to this yield economy, seeing how staking transformed ETH from just a growth asset into one that generates ongoing income. The data is clear. Institutional interest in Ethereum is accelerating, and on-chain and off-chain, with every metric pointing to the next wave already taking shape. As Wall Street positions itself on the blockchain, the broader financial landscape is shifting too. Let's zoom out for a moment and look at the macro backdrop driving all of these moves. Ethereum's momentum with Wall Street doesn't happen in isolation. The whole financial landscape is shifting right now, and the macro picture is moving in ways that matter for every single asset class, including crypto. The US M2 money supply just reached an all-time high of $21.94 trillion, climbing 4.5% over the past year. This surge adds fuel to the system: more cash, more liquidity, and more capital, looking for a home. Assets like stocks and crypto often become prime destinations when the money supply expands. Interest rates set the tone for global markets. Fed Chair Jerome Powell shared that a solid majority of officials now expect to cut rates before the end of the year. Lower borrowing costs historically nudge investors towards higher return assets. And President Trump has also called for rates as low as 1 to 2%, aiming to keep the wind at the back of risk assets. The US dollar index, or the DXY, started this year with its weakest performance in 5 decades. When the dollar softens, global investors increasingly look toward assets like Bitcoin, Ethereum, and equity as alternative stores of value. Confidence is returning in equities as well. The S&P 500, for instance, just logged its fastest 15% drawdown recovery ever, a sign of renewed momentum and growing optimism. The University of Michigan's latest survey shows home buying conditions in the US are still subdued, even with the extra cash moving through the system. Money is flowing, but not every sector is feeling the lift in the same way. ETF analysts have noticed the media's narrative shifting. Coverage has moved past tariff headlines and now focuses on what's actually driving this new chapter for markets. With more dollars in the system, interest rates on the way down, and a broader search for returns, the environment is primed for assets with strong narratives and real demand. This brings us to Bitcoin, the asset that has been breaking records in the middle of this macro shift. Let's dig into what's happening on chain and why the world's original digital asset keeps drawing the biggest players. All this macro liquidity, lower rate momentum, and dollar weakness sets the stage for the next big question. Where is that capital flowing? Right now, a major share is surging into Bitcoin. Bitcoin's demand story keeps setting new records, with the numbers pointing to historic momentum. Just last month, spot Bitcoin ETFs added 42,431 BTC to their holdings, reaching a collective total of 1.4 million BTC, an all-time high. Over just 15 days, Bitcoin ETFs pulled in $5 billion equivalent in new inflows, reflecting strong institutional interest and deeper momentum adoption. Public companies are stepping up. Michael Saylor notes that public firms have become the most assertive buyers of Bitcoin. DDC Enterprise recently raised $528 million to boost their Bitcoin treasury strategy. Figma's S1 filing revealed 70 million in Bitcoin ETF holdings, and their board just authorized another 30 million for Bitcoin investments. On-chain data shows whales, that are basically just large holders, accelerating their Bitcoin accumulation or purchases as well. Analysts observe a clear, what they call cluster effect, with coordinated buying among these major players. Bitcoin demand has run at 4 times the mining supply over the last 18 months. Creating intense upward pressure. SharpLink Gaming is expanding its moves in the Bitcoin space. 21 Capital, led by Jack Mallers, is preparing for stock exchanges listing with significant focus on Bitcoin. Each new corporate decision builds the case for Bitcoin as a strategic reserve and treasury asset. Record-breaking ETF inflows, whale accumulation, public company adoption, and rising treasury allocations are all visible on-chain. Analysts and traders highlight that heavy price churn rotation is occurring while the underlying supply gets absorbed by long-term holders. Bitcoin's foundation grows stronger with each wave of adoption and every uptick in institutional involvement. So while the spotlight often swings to Bitcoin, the same forces are reshaping Ethereum, where price patterns and market structure are starting to look a lot like traditional equities. So let's dive into what's brewing for ETH. So with so much capital and attention pouring into Bitcoin and Ethereum, there's another story quietly building momentum on the edges of the spotlight: Solana. Solana's numbers speak for themselves. This year, daily transaction counts reached 162 million, while decentralized exchange volume surged to 890 billion. Real activity and deep liquidity are making Solana a serious contender in the world of blockchain infrastructure. And one of the biggest developments in the rise of tokenized stocks on Solana, traders can now access digital versions of companies like Apple, Tesla, Google, and directly on-chain. The upcoming Solana staking ETF adds another layer, attracting new flows and interest from investors. The X Stocks dashboard reports more than 4.4 million in recent volume, over 3,000 active traders, and a $7 million market cap for these digital equities. Tokenized stocks represent traditional shares in a digital form, available to trade around the clock without relying on Wall Street's old system. So the future is truly here, and the stock market is finally checking in. Solana's ecosystem is pulling a significant slice of traditional finance on crypto rails, bringing a $1 trillion market into the digital age with real traction. And Robinhood's CEO just announced plans to build a bridge between crypto and mainstream finance, connecting real-world assets to the blockchain. The gap between digital and traditional markets is closing as these projects move forward. And Solana's rapid growth, the momentum of tokenized stocks, and support from major trading platforms all point to a new era where on-chain assets are emerging as true competitors to the legacy counterparts, or the old world. As blockchain rails stretch further into the mainstream markets, the next chapter unfolds in Washington and beyond. The landscape for regulation, geopolitics, and institutional adoption is shifting rapidly. Let's see what is happening behind the scenes. This week brought some of the most consequential moves yet in regulation and institutional adoption. The US Senate, for instance, passed Trump's Big Beautiful Bill, making a tie with Vice President J.D. Vance's vote. The new bill includes major crypto amendments that set the stage for broader industry growth. The SEC is actively considering new generic listing standards for token-based ETFs. And if approved, this could open the doors for dozens of new digital asset funds to trade on major exchanges. Deutsche Bank, one of Europe's largest financial institutions, has confirmed plans to launch crypto custody services by 2026, next year. They are entry signals that traditional banking is preparing for a future where digital assets are fully integrated into mainstream finance. And on the asset management side, Grayscale received SEC approval to convert its digital large cap fund into a multi-crypto ETF, as I was saying in my intro. This move opens up institutional exposure to a full basket of top coins, including Bitcoin, Ethereum, and Solana, Cardano, and Avalanche, through a single regulated product. For the first time ever, we might see the next altcoin season unfold through ETFs instead of only on crypto exchanges. Time will tell how this new wave of institutional access shapes the market. ETF analysts also note that media coverage has moved. It's shifted away from tariffs and trade wars and is now zeroing in on how regulatory changes drive growth and investment. And Robinhood is actively building a bridge between blockchain and mainstream finance, with its CEO making statements about integrating real-world assets on-chain. Senate votes, SEC proposals, and banking giants like Deutsche Bank stepping in show how regulatory changes and institutional adoption set the pace, set the tone, and the stage for crypto's next phase. So let's bring it all together. Let's reel it in. Today we watched Ethereum take center stage in global finance. Wall Street is stepping in. Banks, asset managers, and government policymakers are building, staking, and holding Ethereum. For years, headlines warned of bans and crackdowns. Governments dismissed crypto, demonized it. Conversations about crypto often ended in skepticism or jokes. But now the world's biggest banks, the Senate, and the leading corporations are talking about crypto on national television, holding digital assets as part of their long-term strategy. So you see, the pace of change is remarkable. For everyone who has stayed in this space, this is history taking shape, happening right now. What a moment to be alive. So thank you for watching today's video. If you want to keep getting this level of insight and research and staying a step ahead as a new financial system keeps evolving and unfolding before us, I would just ask you like the video. It literally means the world to me. And share it with a friend or family member, because this is how we shape and take a hold of our financial future, is by taking personal responsibility and then helping those who just don't know as much as we do. Anyway, I love you guys very much, and I will catch you guys in my video tomorrow. Ciao, guys.